Hey guys, Mike here, Ripple Quants. I want to give you a really quick crypto market update. It's March 3rd, 2022, and we've seen some interesting formations in the last few days. So, as you remember, right, we've been kind of whipsawing around here for a while. We're in a congestion zone, and we have this beautiful formation here, which I've talked about several times now, but just to kind of regurgitate. There was clearly support that was broken back in, what was that, mid-January, right? So we breached through this support that was very obvious, right? That shouldn't be breached, and the price level was around, the 40,000 mark, 39 or something. But it was really the 40,000 mark that was threatened here, and then it finally gave way, and there was a price to be paid, right? So we plunged down, and we established fairly quickly, and that was positive, the spike low here with this long wick. And that's good. So now we're looking down here. See, we have this formation that has developed ever since, and it's really make or break point here, because when you look at this rise here, right, we have these sudden jumps. We see them twice here. Once, two. See that? There's one, miss two, and they have a similar length, similar vehemence, all in one session. Punches up, tries to cling on, tries to overcome, right? And this first time, when he was trying to overcome the series of lower lows and lower highs, it failed, right? It barely made it, but then fell back, and it was a price to be paid again. Boom. So we see this scattered children attempt again. We mentioned that last time, and another long wick. So a little bit higher. So this is also positive, very positive. And so I'm looking at this, and again, it punches up higher and then stops. That was last Monday. See that? That's on Monday here. Monday, Tuesday, Wednesday. Today's Thursday, March 3rd. And again, it stops right here. So now we're starting to form, it looks a little bit like a triple top here. And we'll see what happens. I mean, these lines I drew here, I left them on. I drew them on February 7th, and today's March 3rd. So almost a month ago. Right, and so we dipped a little bit deeper than anticipated, and what I was foreseeing for them is that the breakout, which this never works as cleanly. So this was kind of like a general guide. So again, this was not a premise. That was at that moment, right, on early February, that was in my mind the highest probable scenario. It doesn't mean it has to play out in this fashion. But it did, and so now here we are, we're sitting, right down here, and something needs to happen. So what I see happen is that either it breaks out, it just kind of turns the corner. I think that has let's say, let's give it like a 35-40% probability that it just takes off and then burns through this, which is very important, and then makes a run for 50,000, where most likely it'll counter resistance again. Let's see this level right here. There's another, and if it ever clears that, then we're golden. So basically, this would breakout pattern, right? This would be the the breakout trigger, and if it breaches then over 50,000, that would be confirmation, right? And then most likely we'll just punch up higher and potentially make new all-time highs. Now that's the most bullish scenario. Give definitely another 35 to 40% to us dropping back down again. And again, churning around for quite a while, another week or two, driving our own bonkers, and then, then finally picking up some speed and punching up very quickly, most likely. The last scenario, if you do the math, it leaves another, depending what percentages we assign, we allot, leaves another 20%, and that is where we fall back here and actually slice through all this and drop through here. If that happens, we're in big doo-doo, and most likely we're going to 27,000 at least, right? I mean, if we zoom out here, if we breach below 30,000, it's it's good night. So we're probably heading to in the 20s somewhere before it catches itself. Could get ugly, but I don't really see that right now. That's not the highest probability scenario. It is one scenario out of like three main ones, and then there's sub variations of those three themes, but that's what I would call it. And so I think we have a fairly good opportunity at this point, a good chance that we're continuing higher. And that this is very positive, what we're seeing right here, right? It's just in terms of price action. There was another, let me pause real quick. I'm going to put up another chart. Actually, I have to go on a phone call soon. So let me, I have to go on a phone call now, right now, this second. So I'll show you that later. Actually, screw it. I'm going to add another minute. I actually have to be on a phone call right now, but I want to finish this up. This is one of the most bullish charts in my arsenal right now, and it basically has to do with entity-adjusted dormancy flow, and dormancy has to do with coin destruction, and it's just like, when I read that term for the first time, like, what? Coin destruction? Let's say you buy a coin, right? Bitcoin, any coin, and you don't touch it, you just hold it in your account. Right, so you're accumulating time, and like a month or 2 or 3 or even a year, it accumulates this time, and at some point you're going to spend that. Maybe never, but if you spend it, all the time that you held it, that's being destroyed. So that's called coin destruction. And so basically, this entity-adjusted dormancy flow, again, fancy terms for. Basically, down here's the description, right? Ratio of the current market capitalization and the annualized dormancy value. And that's, that has to do again with coin destruction. So that basically tells us in this nice ratio here, right? How old the coins are on average. They're being destroyed, being touched, being spent. And as you can tell, right, near market highs, we see quite the age of the coins being touched, right, being destroyed, meaning like, being in terms of coin days destroyed. That's actually, I think, the term. They get longer and longer, and then near the bottoms of bearish corrections, we see it down here. And this is this clear zone where it bottoms out, and we saw this one several times over the last decade. And last May or June, I think this is in July, yeah. That's when it bottomed out. That's when the market bottomed out as well. Right? So it got this correction in May, then in June, July, and boom, right here. See, slightly dip below. This time, if I want to zoom in here, we're much deeper in, and so this supports my notion that this is just one chart, and we can look at a bunch of them. But I wanted to make this quick, and again, I have to jump on a call. But I wanted to drop this real quick for you guys, and let you know where we are. And the price, price is always the ultimate denominator. And that's what we mainly look at. And what I described needs to really occur right over here. We need to really breach above this, we need to clear the 45,000 mark and push into 50,000 for this to be over, to really interrupt this whole, downsell sequence here. We have a good chance, but if the market fails it, then there again will be consequences. So it's make or break time. Talk to you later. Ciao.